and welcome to another installment of the Deal Room. If you, ladies and gentlemen, have ever worked in lending, you probably think that the last day of the month is, another day, another business day. But inside the mortgage and the business lending world, it's war. Our phones are ringing nonstop today. Processors are panicking, trying to make, end of the month numbers. And, underwriters are definitely overloaded. Right now, especially at the end of the month, people are trying to prioritize the larger files, okay? Usually today, you take today to fund like all the small guys. Everything is usually less than six figures. Usually in the business funding space, we try to get that done today. Tomorrow is all about buzzer beater fundings. So this evening, just wanted to touch base, let you guys know a little bit, we'll give you guys a little bit of insight into how our kind of week was and how we went ahead and teed up this week to try to go ahead and get all of our files prepped and ready for the last 2 days of the month. Jose, you are well versed in both industries, both business funding and both anything mortgage and real estate related. Can you give us a little, before Stanley gives his real estate take and I give my business funding take, why don't you give us just, I guess, like a hybrid take of like what differences you see in the two industries as far as trying to get these deals teed up for the end of the month?
Honestly, on both ends, there are a lot of similarities, right? Because for some reason, the last day of the month, either you have the lender calling the broker, or you have the broker reaching out to the client. And the reason being is because both departments have to hit numbers, right? At the end of the month, you have to make sure you meet your quota in order for you to brag, right? I think it's mostly about bragging rights, but also to obviously monetary reasons. But majority of the time is you want to be able to brag around the office that you're the top dog. And I think that that's one of that's the spirit that you get in a sales office, is everyone knowing, hey, that's the top guy, that's what I aspire to be, or I want to hit the numbers just like that person did. So on the mortgage side, you do have lenders calling up, hey, are we closing this file, or we're moving forward, what's going on? If the client says, yes, let's move forward, you have to keep in mind, you still need a title, you still need appraisals, right? So that takes time. If it's in a rural area, you're not getting that appraiser out there and then having him complete the report within 24 to 48 hours. It's a possibility, but more than likely, it's not happening within that time frame. On the business lending side, you can literally call a client today, have the client send you the documents, and if there is that sense of urgency, fund the client the same day, or worst case scenario, money's in his account the next day, but everything's already been done. Right? It's just the ACH, the wire hits the following day. So I would say there's a lot of similarities, but the different stages. It depends on what stage the file is actually going ahead and moving to close. I don't understand why everyone waits till the last day, but expects you to drop everything once they say, yes, I'm ready to move forward, or the client doesn't feel or doesn't believe or doesn't understand that there are other files ahead of them, right? Other files that already have whether it's a pending title to be cleared, right? Just to give you an example of one of them today, where you're waiting for for them to clear title so you can get a clear to close. So it depends on the stage, right? And I think that, Stanley, you want to just elaborate on that, on your experience as far as today, what happened? I know that you've been pushing for this particular file and you were even getting frustrated because it was taking a couple of days to get a title cleared, correct?
I need my title cleared. Why? Okay, 24 hours passed. Okay, where is it? 48 hours, where is it? When people treat you the way you tell them to treat you. So when they see your name and they know I'm sending an emails coming from Stanley, oh my God, I need to get on this. A text is coming from Stanley. That sense of urgency, if the person doesn't have it, you have to instill it in them to know you could deal with everyone else that way, but with me, you have to shift the gear. People get complacent because a lot of processors are sitting there hourly pay, and I'm not knocking processors, I'm just being honest, and they go, okay, I'm just going to touch 20 files, you know what I mean? I'm going in and out, I'm going at speed, but there's people that have deadlines, and those deadlines need to be met, and at times you just really gotta escalate. So depending who you are in the company, and there are various companies, certain people that just go to their manager, then a supervisor. We don't get involved with situations unless we're the owners or we have direct access to the owner. So we really push on those gears saying, hold on. And let's say a processor is not doing their job. We're quick to go, management, is this really your time period? So I'm using my time, my relationship, my resources, and I'm building these relationships, and you're the brand behind me, but then you're not delivering. So you have to hold these people accountable. So it shouldn't be last minute. It really shouldn't. It should be running the way you want it to run. If it doesn't, pressure bust pipes. You need to apply pressure.
So
Find out the weak point.
So wait. So I thought clear to close doesn't mean it's going to close tomorrow, right?
It can close tomorrow.
Really?
Yeah.
Okay, so once something is clear to close, like in the mortgage or real estate game, what exactly does that mean? Does that mean deal gets done tomorrow, or like all docs are in and now you're still waiting on just something?
No, people just have to schedule. So let's say right now, the title company, the buyer's attorney, the buyer, the seller's attorney, the seller, let's say they're available tomorrow at 5:00.
Yeah.
You can close.
Really?
Because now you're at the mercy of availability.
Gotcha.
So you have to hope the attorney doesn't have a full schedule tomorrow, or the buyer's attorney or the seller's attorney. Title company normally will budge. We thank God we have a great relationship with ours. They'll make it happen. But now you have the mercy, even the clients, the buyer and the seller. What if they have work and they can't make it during that time? What if they went away on vacation, they're not back? You're at the mercy of it. So that's why I always tell people, clear close, I did my job, let me get the hell out the way. Because there's nothing I could do that would be beneficial to anybody. Because if something messes up, I don't want my fingerprints on it.
Now, is it up to you to do the scheduling between all of the parties? Or once it's clear to close, now it's up to the lender to schedule it with all parties involved?
It's the closing department or title company's responsibility. The only time I get involved is if the client wants a certain date and people are giving excuses. Because at the end of the day, this is customer service. So I normally let it handle, and then let's say a client's like, well, I really want to close Friday. Okay, let me see what I can do. I'm going to call the attorney. Oh, I can't fit. Are you serious? Then I call the client, like, you're paying this person, and they're just choosing not to be there when you need them. And then you start playing that game, like right versus left, left versus right, and you just control the middle to get the client what they need. Because clients are willing to be, okay, before work, I'll come sign. I'll come after work. It's not like these lawyers are getting paid $2 either.
Yeah.
And not to belittle any lawyer, if you look at if you go to an attorney's office, right, and you look at a purchase contract, he only has one. You wonder why? Because everything's a copy and paste. He's just filling in names, addresses, and goes here and is making 4 figures minimum. And listen, they went to school, they did the time to be able to have that profession. So I'm not knocking it, but let's call it what it is. You sat there, the realtor negotiated the price already. You have your template of the contract. You're going to sit with the client. You're going to go, oh, well, do you really like the house? Is there anything you want me to negotiate for you? Okay. Boom. That's it. They're not involved in transaction at all till the end.
So you said ended to negotiate. The lawyer asked the client that in front of all the other parties, like at that closing table?
No.
Oh, okay, this is before.
Prior to, yeah.
Okay, gotcha. So, like, what are some of the things that because it's interesting, I never knew about this. So, what are some of the things that, like, me as a client would want you to, as my lawyer, to potentially negotiate to me before we get to the closing table?
There is no real negotiating in the middle.
That's what I thought.
You handle it at the beginning unless something happens.
Gotcha.
Then you have that leeway. For example, something you expected to close and keep the appliances, but then you go for your final walkthrough and the appliances aren't there. Or the house is supposed to be delivered vacant the moment you sign. So what happens is they're supposed to hand over the keys. You're supposed to run over there, make sure your key, and change the locks that same day. But some people will say, oh, well, I need another week. I need another. Oh, what? So now either I'm not closing till you're out my house, or what happens is they could charge the seller what they call a per diem. So per day rental. As long as your stuff's in my house,
I could charge.
I get paid.
Can you gentlemen each tell me one time in which you guys got to like a closing table, everything was ready to go ahead and fund, last day of the month, everything's ready to go, something goes awry with the deal at the closing table and it does not close? Jose, you laugh?
Yeah.
Give me an example.
There was a client, I think it was last year or a year and a half, sometime last year. The client, everything was in, got him the great rate. No one else was able to get the deal done. He received all the disclosures. Everything was good. He was eager to close. At the table, he said, I don't want to move forward. Why don't you want to move forward? It's too expensive. Hold on. What do you mean it's too expensive? The fees, can you drop down the fees? Majority of the fees, right? If you're looking at title fees or real estate fees, you can't really do anything with that. And at the end, he didn't close, but
Wow.
yeah, it was just that for me was, that I think was one of the upsets. One of the biggest upsets was just the client already had all the documentation. He had the closing, because remember, everyone gets something called closing disclosures or a HUD or whatever you want to call it at the end, a document. Let's call it a document at the end that displays everything: loan amount, program, rate, fees, everything you could possibly think of there, so that nothing is a surprise at closing. You should review it, right? As a borrower, you want to know what you're signing, and you should, rightfully so, you should, but review it the day before, not the day of, and then expect them to change it on the spot. Because remember, the attorneys and loan officers that I know of majority of them don't attend the closing table, right? It's just the attorneys. As a borrower, know that nothing may really change, or it's not very likely that something's going to change at the closing table. So if that's your tactic of, hey, listen, we're at the closing table, so I can strong arm them so that they can close the deal, it rarely happens.
You know what I wanted to say to you? I guess that's frustrating, because at the closing table, and guys, correct me if I'm wrong, but don't we get paid that? Do we get paid that day?
The company gets paid that day.
The company gets paid.
That day.
And then they send us
Either through wire or check, not the loan officer.
Okay, got you.
Correct.
But that's got to be why that's so gut wrenching, because you figure guys had the docs the mortgage deal. It probably took a little while, right? Guy probably had the docs for like a month. Everything's good, and at the closing table, just a gut punch. Yeah, it's like, screw this. Like that's got to suck. Especially, I know how much time and effort it takes to go into some of these deals. Stan, you have a little bit of like a war story for us in the event in which something like that happened to you, like closing table, everything's good to go, and then all of a sudden buyer's remorse or something at the funding table, something in that room just screws up and the deal doesn't go through.
No, they always close. And the reason, and I'm not trying to, I'm not trying to be cocky. I'm not. Trust me, I'm not saying that. Not do I say it with all due respect.
Is that a Jadakiss bar?
No, yeah. I'm being honest, because I've had clients have buyer's remorse. They sit there and now they look at the payment. But you need to know your client. You need to know their pain point. Like the last one, I almost had a runaway was the husband, Haitian family, and great people. And then everyone loves the American dream, but doesn't always understand the cost of it, right? And then they start going, oh, well, this payment, can we get it lower? And I'm like, the payment? I was like, hold on. How much? And then I've been in this business so long that I know certain words and where I have to go with it, right? Mm-hmm. So when someone starts talking about financial, I look at the negative, I got to look at the positive. Okay, well, my payment's $2,000. And let's say a house in Long Island, average taxes, let's say $10,000, $12,000. Yep. Then I go, oh, but the taxes are a write-off, right? Like, what do you mean? You're making the same income, and now you're paying rent, you get no write-off. But now you get to write off the property taxes. So now that changes your tax bracket. So now Uncle Sam's going to give you a bigger refund. Oh. But it's different with an investor. Investors going to look at the numbers. And with an investor, it's almost, I don't want to say, you have to do the same thing but differently. Because when you're doing DSCR, it's more about cash flow and profits. Mm-hmm. And a lost opportunity. So you're never getting there. If a guy gets to the telling table and says, I don't understand what my payment is, I didn't understand my closing costs, it is, because they get that document at least 3 to 4 times, breaking down what your closing cost, what points you're paying, your interest rate. It's called some call it a LE, a loan estimate, and others call it a CD, a closing disclosure. It literally breaks down the loan amount, the interest rate, your term, your monthly obligation on that, the breakdown of principal, interest, taxes, and insurance. If you have a HOA, what your HOA payment will be. It breaks down how much you're paying the underwriter for underwriting, for processing the loan. It breaks down when your credit was pulled, how much it cost. It reaffirms how much you pay for the appraisal because it's the cost of the transaction. Mm-hmm. So even though you paid outside of closing, you will see the cost of the appraisal. Then you'll have your title cost. and then it breaks down what every piece of that title. So it's not like a $5,000 bill. It breaks it down saying we had to do a background check on the buyer, background check on the seller. We had to do a background check on the seller to see if there's any judgments, any liens, bankruptcies, things. So it does a complete all through the country. So when
Itemized, yeah.
Oh, everything. It breaks it down to protect between money laundering, fraud. For example, when you buy a home, and let's say the previous owner had a dental bill they never paid, they can't put that lien on your property. You follow me?
Yeah.
Then you have your monthly interest and taxes. Then you have transfer taxes. Then you have, of course, your state's going to get cut, the county's. So it breaks out very detailed. So one thing, what happened with Dodd-Frank back when 2000, when the market collapsed, one of the biggest arguments is they felt people didn't understand what they were getting into.
Yeah.
And then that's what created Dodd-Frank. And that's why you're not allowed to shock a client with closing costs anymore. I have to give you an estimate. So, and it can't be too low. So if your closing cost is 50,000, but I quoted you 20, you better believe I better be able to explain what the 20,000 is.
What advice would you give to new Jose, new to this industry, to kind of prevent him from losing a deal at the table ever again? Is there like a certain checklist that he should go down to make sure that his borrower can understand everything so that there's a 0% chance, like you have had, with going ahead and getting a deal done at the table? Is there any system of checks and balances that you might have that he doesn't that'll help him in the future?
Let's backtrack. I'm never saying it can't happen.
I didn't say it can't, but you said it has not
happened to you.
You said it has not happened.
Wood, not happen. But, once again, I don't know that client's pain point. Like, there's no way someone's telling me you had a pre-approval letter before you went shopping for a property.
Yeah.
When he went to Jose went and told him, this is the monthly payment. Can you afford it? He knew that from day one.
Yeah.
Then when his file was submitted, no matter what, private lender, public lender, they're going to redisclose those numbers to you.
So there's 0% chance that he does not know these numbers.
But there are clients that just...
They don't pay attention.
Yeah.
Gotcha.
There's some clients I've sat and gone, hold on, didn't you see this? I see your signature here. You signed it. You didn't read it?
Me?
And they really, and then you're playing triage because now you're trying to put it together.
Yeah.
That's why I say when that happens, they're like, oh, I can't afford the month. Like, but you can't afford not to take it. You're paying what you're going to pay in a mortgage. You're paying maybe 50% on that in rent. You have a 1-bedroom apartment. You're getting none of the tax benefits. There's no appreciation in value. Look at all the benefits. And mind you, home ownership is not for everyone. Mm-hmm. But this comes to knowing your client. Investors, same thing. Investors are looking for cash flow. So when you're looking and quoting them, they're thinking about what they're going to net. To be honest with you, if I worked at Chase Bank and I was getting paid hourly, submit 100 shitty apps that go nowhere. I wouldn't care. But with us, we get paid to perform.
Yeah.
And the beautiful thing about mortgages, the reason I love is because if you do right by someone and you make them feel good at the end of the transaction, you're going to get a referral.
I think a lot of people do business lending, right? Or the people that do not, maybe you shouldn't get into it because it is a little tough. It is a roller coaster. But go ahead, Daryl. Share one of your experiences with.
I'll give you one from last week. So I
Need a shot?
I funded this after this, not to kill Thursday. After, listen, I at the company that I worked for like 4 years ago. I was funding this guy. He actually owns Auntie Annie's, which is I guess it's like the pretzel whatever shop.
Yes. Oh God, now I'm hungry.
But now he owns one inside of Walmart.
Oh, money.
Right? Mm-hmm. So I mean, people just walking in the door, like people, and you know, Walmart, those businesses like the McDonald's or whatever, and the Subways are right as soon as you walk in.
Correct.
So they get natural traffic. So I loaded this guy up. This guy ended up having 3-4 MCAs. He ended up busting out. I never talked to him again. Even though I reached out, he like changed his number or whatnot. But luckily, through Lucas's, shout out to Lucas, through our skilled marketing, we ended up getting him back in. Now he opened up a liquor store. Okay, so now he opened up a liquor store. Coincidental. It was like a couple of buildings next to the Walmart, right? Still in the same vicinity. So I see his name. I'm like, I know this guy. So I call him and I get him back on the phone last week, and he's like, "Oh yeah, man, the Auntie Annie's. Oh man, you know these MCAs. I went bad. opened up another business. Now, I don't know how, but no one caught his defaults from back in the day. So I get it, and this guy has been in business, no lie, since November. Didn't really start really gaining transaction and stuff until January. So technically, he's been in business for like really showing revenue for like 4 months. Got him approved for $30,000. Then when they went to log in, he didn't really do enough deposits. The approval got cut in half to 15. He's like, oh man, I really wanted to, spruce up the inventory because again, it's a liquor store. But I'm like, brother, listen, who cares? There's somebody that's willing to give you a chance. You know you defaulted. You know you busted out on a lot of people before. These people are not catching it. Let's run with it. Okay, send me the other contract. Send the contract. 15 points, 15K, 12 points. Boom, funded. High-fiving. I'm like, yo, Jose, you have no idea. I got this past the goalie. And Jose is the case, 15,000, whatever. He's like, hey, good job, Daryl. What? The guy calls me. The guy calls me at 7 p.m. It's after hours now. I'm home. I'm hanging out, watching the game. He's like, Daryl, I'm sorry. My wife's seen the money hit the... And again, I got this deal funded at 3 o'clock. Funds were wired by 4:30.
Oh, that's why he returned it.
What?
I just ruined your story.
The guy fucking returned the money the next day. Funded him in his account, same day. Like, again, I spoke to the guy in the morning. Contracts out, money in his account. That's how fast MCAs can fund.
Yeah.
Had the money in his account by end of day. EOD, end of day, in his account. What? Again, it's new business. Now, his wife knew how much trouble that they were in from years ago, busting out on all his MCAs. What? She seen that money in the account. She was like, I'm going to divorce you if you don't return this. Straight up.
That's love.
Sure. But then, listen. But again, I'm like, brother, you just beat me up for not being able to fund you 30. So now I got 15. Now you got 0. So are you gonna like say anything to your wife? Like, where are we gonna get the inventory from? He's like, oh, she's gonna try to borrow it from a family member. I'm like, all right, yeah, no problem. But again, his wife seen that money at the account, and he was like, I didn't talk to her about it because you called me this morning. He was like, he was so impressed by how fast it went. And again, it wasn't like I got the approval the day before. He had to talk to her. What? I get the approval at 11. The money's in his account by 5 o'clock. You know what I mean? So she seen that, and she's like, you didn't talk to me about this before you left the house today. What? Next morning, he ended up returning the money. Now, unfortunately, I had a slow week last week. That was the only deal that I had that was gonna close last week. So the only deals that I was gonna fund last week, leading up to the last week of the month, the fucking guy returned the money. So that's and that's only the second time. I've been doing this for 10 years. It's only the second time that someone ended up returning money on me. The other time was like a couple of years ago, but that was a little bigger. The guy ended up returning $142,000.
That's crazy.
You know what I mean? So that was a bigger payday. You know what I mean? I was a lot more pissed at that. This was just like a rainy Wednesday. I was just gonna be happy to get that, get that money the next
If
week.
we're talking about an after closing blunder, I've only had one, and it was major.
Now it was one.
Right? No, after closing. She closed. Lady bought a house in Florida. She spent over $100,000 of her own cash. Right? I think it was for a $650,000 house. She spent over $120,000 down payment, closing costs.
Jose's laughing like he knows this deal.
Oh, he does. Because he's had to send those checks with me. And she said she owned a marketing company. Checked out the business, been open, the money's sitting in the account. It's not like a lot of transactions. Boom. Then we get to closing. Great. Time for the first payment. Crickets.
No.
We get a call from corporate.
No.
What are you guys doing? I'm like, what do you mean? What are you doing? The lady isn't making her first payment. I said, what do you mean? No one's going to default after putting $120,000 into a house. Who's going to risk losing it within 30 days?
Did she pass away?
No. Now we're calling. Now in the mortgage business, there's something called a buyback, right? Where even though the bank is lending their money, if that client defaults within the first, depending on the lender, 6 months to a year, I have to give the money back to the bank. So think about this. We're on the hook for $500,000. So now we go, what do we do? So now we speak, we had a conversation. We're like, okay, we'll make the payment. right? We'll assist. So
I'm sorry, just interject because I'm caught in between you guys.
Yeah.
Pause. But you just had such a look of pain in your eyes looking at Jose just now. Like that must have.
it was.
That must have hurt. All right, continue. I'm sorry.
So we're gonna pay it. But then we got in touch with someone that was like, yo, you know what? She's having a hardship. I'll cover it. So we're like, perfect. We got someone to fill it in. But we're like, yo, help her out for a month. Call her. She's like, the guy makes the first payment with her, helps her out. Boom. Okay, great. Next payment. Guys, what's up? She's not making a second payment. We're like, what? And Jose goes, Stan, mind you, I've never had this happen in my whole career.
First one.
Since 2008, I've never had one client miss a payment on a mortgage. So this is new to me. Jose goes, Stan, what's going on? I was like, I don't know. What's the repercussions? I don't know. I hear about clawbacks. I don't know. I don't know. We go there. They're like, yeah, you have to make sure she makes her payments for 6 months or you're eating the $500,000. So now she finally picks up the phone. Yo, because she's avoiding. She's not on the phone. What's going on? Your bank things are good. Da, da, da. She's like, yo, it's just business is really slow. I was like, what you mean? Yo, my job, was doing that good, and now it's not the busy season. Marketing? What do you mean busy season? She's like, I'm a dancer. I'm like, oh, ballet? She's like, no, nightclubs. And she's like, Miami during the summer, was it summer? During the summer is slow. And she starts talking about it like she doesn't have a default happening. So we're talking. She's like, yeah, I go from club to club, and it's not tourist season, so it's slow. So making that payment, because she has like, was it $3,800 payment, something big? Damn. So we're sitting here and we're like, hold on, this can't be life. And we just got on with this company. It's like, we can't be life. So then one of our benefactors we call, and he's like, yo, I'll help her out again for 30 days. So now every 30 days for 6 months, we're sweating bullets. Now the benefactor really believed in her that she would,
of course,
that she was gonna come and pay.
Does she have a subscription that he subscribes to?
Then we called. We're like, yo, listen, let's say you can't afford the home, sell it. You live to fight another day.
Yeah.
I think she sold it. She probably made 20. She would have kept at least 100,000 cash. Once I mentioned that, she stopped picking up the phone.
She's like, I'm going to sell it.
Wow. That's what I need you guys for.
We're trying to help. We picked out a realtor for her. We negotiate everything because we're like, we want everybody being green. She could pay back the benefactor. Everybody's good.
But fellas, but let me ask you this. So in the business lending side, and I want to keep alluding back to business lending because that's what I know. Jose, so question. In the MCA world, no lender is going to fund a negative account. Correct. Right? Mm-hmm. Lender is also going to do a whole lot of homework. They're going to see, let's just say your landscaping business in New York. Mm-hmm. When they before the merchant gets funded, they complete either decision logic link or plat link that lets them go back 6 to 12 months and see, what they had coming in and out of the business account to determine seasonality, right? Because if I'm going to fund a landscaper in New York, but it's November, I need to know if they do snow removal. Like, you're not mowing a lawn if the lawn's frozen. So lenders go back a couple of months. They check to make sure that you're able to afford whatever payments are coming up. And sometimes that's how you lose deals. But how the hell does a lender in the mortgage field kind of predetermine whether these people can make the payments or not? Like, how does a blunder like that happen?
Uncle Sam. Because in as long as the United States government knows how much you made, we will use it. Like, it's as little as, and I don't recommend anyone doing this. If they go, you know what, I'm willing to pay taxes on $120,000 for 2 years. Guess what? They walk in a bank. They could put $120,000 a year on that document. And when we go to IRS saying, what money does he pay taxes on? They can say $120,000. That's our number. I read a book a while ago, right? Where it's called, written by Mr. Cortez, called Sense of Urgency, right? And people don't realize if you operate in a way of sense of urgency, it becomes normal. So you're never rushing because you're constantly moving something forward. When you look at your business, look at it in a sense of urgency, and then it's weird. You're urgent, but you never have to rush because everything is getting done. So that's my tidbit, is that just look at your files, like, get it done when it's supposed to be done. Don't procrastinate. Don't wait. If you can get it done now, do it now. If it can't get done now, go to something else you could do right now. That's it.
Stand the closer, y'all. Jose?
Very nice. No, listen,
That's a hard act to follow.
I think I read that book too, Stan. So, listen, we're coming towards the end of the month, and one of the things that you have to understand in order for you to be successful is preparation, right? I feel like the last 72 hours of the month are what's going to set you up for the next 30 days, right? Everything from building a pipeline, planning your month, planning who you're going to speak to, going back to the clients that maybe said no to you before, but situations have changed. Daryl does this all the time where he would go back to merchant decline because a merchant might have declined the deal at that time, but you don't know what opportunities might have come up the following month or this month coming up. The same thing with mortgages. Maybe the client at that time didn't get the purchase contract. Maybe he wasn't ready to move forward, right? Maybe there was a death in the family. I say that because that happened to a client of ours where we're waiting now. So just plan it out in order for you to be successful so that you don't rush at the end. Also, too, organization is key if you want to be a top producer, because the last thing that you want to do is be that person that the lender receives an email from you and then goes, oh, this person again, right? You want them to be, oh, great, they send me over a file because they know everything is structured, from labeling bank statements, from labeling the application, from making sure the application itself is correct. You'd be surprised how many times I've seen a regular application incomplete. And you ask the broker, hey, what's up with this? What's up? I don't know. Let me ask the client. It's just, forget about just not, it's not being professional. It's just, you should, that's what halts a deal, right? Because if you get so many deals in, you're not going to remember the deal from a couple of days ago that you forgot the social security number. So organization is key. And also, too, as soon as you get a task, try to accomplish it right away and get it done correctly the first time. Correct. Right? Those are my final thoughts.
Yeah, it's so crazy because you guys said very similar things. Like, you get a task, just do it. Just do it right then and there. And that's something that I'm working on. Whenever you try to push something off, it 99% of the time, bro, it gets swept under the rug.
Yep.
Right? It does. Do it right then and there and just get it out. Just get it out of the way. But ladies and gentlemen, just want to wrap it up. The last day of the month really does expose everything. Exposes things from weak systems to weak communication, weak follow-ups, or just, weak preparation as a whole. It's going to be people that are going to go ghost on you. 9 times out of 10, those people are trying to explore other options.
Correct.
But yesterday's price is not today's price. So when they come back, you make them know that yesterday's price is not today's price. Maybe the rate's got to be a little higher. Maybe they have to pay a little extra percentage on a fee to really appreciate your time. But at the end of the day, people, don't wait until the end of the month to try to tee everything up. This should be a constant, pushing your pipeline forward, getting rid of the stuff that's not even anywhere close to closing, and really hyper focus on the stuff that is the closest to closing, especially at the end of the month. Jose is very famous for saying work your pipeline in reverse. Work from the steps that are closest to funding, and then you go towards, the beginning, which is the inception of the deal, which is the first phone call. I even did, I stepped it up a little bit. What I've been doing since the beginning of this week is everybody, I think I had probably like 20, 21 people that I pitched this month that the deal wasn't for them, it wasn't the right timing. Usually I wait till the beginning of the month, just like Jose said, to reach back out and get another bank statement, but I did something a little different this week. Started reaching out to everybody I didn't fund at the end of the month and tried to see if their situation changed before. Because listen, usually when people come back from a holiday weekend, everybody needs money. So you wouldn't believe there was about, I think I pitched like 33 deals this month that the people that did not take it. I got 10 of them back on the hook that sent me a month to date, that are trying to rework the file, and I'm trying to, knock on wood, trying to get a couple of buzzer beaters tomorrow that I'm trying to get repriced, or I got AR and which is accounts receivable, and I'm trying to go ahead and submit other mitigating factors to the lenders to try to get an extra month on the deal, to try to get an extra $5K on the deal, because maybe that might be the incentive that I needed that I didn't have at the beginning of the month. Well, chopping with you, ladies and gentlemen, next Thursday. June is the best month of the year. It also brings us to 50%. We're halfway through the year. So if you guys, it's gonna be the end of the second quarter. If you guys have not hit your financial goals, so far this year, you still have until the end of June to kind of, it's the midway point of the year. You can gauge where your earnings are, see where you're at, see where you, need to retool. Summer's coming up. A lot of people are going to start going on vacation. You might have to chase a little bit more. You might have to chase a little bit harder. But ladies and gentlemen, right now during the summer, lots of business gets done. It's the busy months for the majority of almost every industry out there. No one has to worry about cold, nothing like that. So be aggressive, stay diligent, stay dangerous. We'll see you guys next week. Take care.
The Deal Room by Brokers Connection.